Cash Flow Guys Podcast, episode 23.
Welcome to the Cash Flow Guys Podcast. Join Tyler and his team as they unlock the secrets to achieving financial independence through wealth-building strategies inspired by Robert Kiyosaki and other thought-provoking leaders.
Learn to build leveraged streams of cash flow that land in your pocket and improve your quality of life.
Gain access to cutting-edge ideas that will increase your productivity and streamline your success. Find out how to supercharge your retirement plan so you won't have to retire with a pay cut.
You can escape the rat race. Are you ready?
It's time to Learn to Earn with Tyler Sheff.
Welcome, folks, to episode 23 of the Cash Flow Guys Podcast. Today, I have a special guest for you guys, but before we start, I want to tell you about our new link for our domain. Easy way to book an appointment with me if you want to take advantage of that 30-minute consultation for free. Go to cashflowguys.com/ask Tyler. That will give you an opportunity to book time with me. That is a special link, goes directly to my calendar for that exact purpose. Look forward to hearing from you guys there. And if you want to link up with us or any of the guests on Facebook, the best way to do that is to go to cashflowguys.com/group. Cashflowguys.com/group. That takes you right to our community there on Facebook, and you can interact with me, the rest of my team, and of course the folks that we have on the show, our special guests. Today is going to be a learning experience. As always, another day to learn. Any day we're learning is a good day. Today we are joined by Patrick Donohoe from Paradigm Life. Pat, are you there with us?
I'm here, Tyler.
All right. I hear you on the Real Estate Guys radio show all the time. I've been a big fan of what you're doing out there, educating the people. That's the same thing that we're doing. And I'll go ahead and read your bio here. I find this very impressive. Pat is a president and CEO of Paradigm Life, started back in 2007 after learning from his mentor, Kim Butler, about financial strategies outside of Wall Street. Now, Patrick, you have a background in economics and marketing. You immediately realized the opportunity to teach investors, business owners, professionals, and families on a large scale using modern digital media and communication technology, something that I could definitely learn a lot from you with. Since 2007, you've worked with thousands of individuals in all 50 states, and you've shared the stage with financial experts such as Robert Kiyosaki, I'm one of his biggest fans, Peter Schiff, G. Edward Griffin, Tom Hopkins, Blair Singer, Donald Trump, and many, many more. And you are also the host now of the Cash Flow Wealth Summit. Is that correct? You co-created that with Tom Wheelwright and Andy Tanner. Is that correct?
That's right.
And folks, for those of you that don't know, Andy Tanner is the author of the book called 401 Chaos. Great book. If you haven't read that, I'll put that link to that in the show notes. That's a really good one. And you guys have heard me talk about tax-free wealth. That was written by Tom Wheelwright, which is a friend of Patrick's. Tom has done our taxes in the past. A great guy, and he's the owner of Provision Wealth. But before we start, I want to talk a little bit about your podcast now. That's something new. How long have you been doing the podcast?
Well, we've been doing it for a while. I mean, we back in I think 2006. So there was a radio show that there was a guy that I knew that paid for a spot on an AM station that's local, and he couldn't afford it. So I took it over and got into that a little bit. And then we turned it into a podcast, and for 2008, 2009, 2010, we were doing an episode a month. But then, we really started to go back at it a couple years ago.
That's cool.
But it's we've had it for a while. I do it because I love talking about this stuff and love bringing guests on. And it sounds like you and I are very similar in that way.
Yeah, most definitely. I'm glad I just tripped over it today. I was like, boy, that's cool. I need to start listening to this one. And today's been one of those days where I've been getting lots of podcast leads. There's a couple of different podcasts that I've been told about today from my listeners. And so I always find that exciting. I look forward to hearing or listening to it because I love to learn.
Cool.
Infinite banking. Now, that's something that mystifies me. really never grasped the whole concept of the infinite banking or iBanking concept. That's really the focus of today's episode. We'll talk probably about some other things. Like I definitely want to get into the Cash Flow Wealth Summit, but I do want to talk about infinite banking. So starting out, Patrick, what is infinite banking?
Well, and I guess you got to first step back and just recognize how human beings function. I mean, we need to categorize things. We need to define things. That's why there's a million acronyms for whatever. I mean, that's how our brain functions. So the infinite banking concept was basically an idea that was conceptualized, but it was an idea that already existed. But it was conceptualized by somebody, and he probably made it the most popular. So his name's Nelson Nash. He's really old now. He's almost 90 years old. He's been doing this forever. He's based out of Alabama. He wrote a book about it. But it is mystifying, and I discovered that early on, because although you try to conceptualize something and make it simple, it doesn't mean that it's going to turn out that way. But essentially, it's a financial strategy, and it replaces the two main reasons individuals are using Wall Street and banks today. In a nutshell, that's what it does. So from a retirement standpoint, it replaces the 401k because it accumulates money and it earns interest. But then it also replaces banks because the insurance companies that allow you to use these products will give you a loan. So in a nutshell, that's how it works, where you basically can outperform the market by putting money into these specially set up insurance policies, and then when you need to use the money, instead of withdrawing it, you can use it as like a line of credit, like a home equity line of credit. You can borrow against it and use it for personal things, business things, real estate things, etc.
Very, very interesting. Now, you captured my attention when you said replacing the bank and the IRA, or the 401k rather, because the 401ks and the banks are probably the things that I can't stand them. They wear me out. Yeah. It's ridiculous what goes on in the banking industry today.
Yeah, and with me, it's more of and I took that stance, and I've taken it for a while. And for me, it's the 401k in and of itself isn't bad, or a bank in and of itself isn't bad. I mean, you're in real estate. I've owned real estate for a long time, and banks are. I mean, they allow us to do really cool things. The stock market, I mean, I'm agnostic because the stock market is really good for some people. But really when it comes down to it, it's why people are there and what they're trying to accomplish. And there's a disconnect between their goals and their needs and what they're trying to accomplish and what actually happens. And that's really where I see main issues is with just how individuals and their ignorance are being exploited and have been for a long time.
And that's a lot of what you've done on your website there. I see you've got a lot of training materials and opportunities for people to learn more about the different things. And when we did your interview, or when we did your introduction there in the beginning of the show, the people that you've shared the stage with, those are people they're the icon, the legends in financial intelligence, and it's pretty cool that you're right there on stage with some of those. You look around and I think, oh my goodness.
A lot of if you on our podcast, we don't talk specifically. We do get into the elements of what we do, but we more focus on the philosophy around it. And one of the things I've seen in my life is that my number one asset is the people that I know and my relationships. And I think if people looked at their life that way, it would completely change things, because it's not like you just walk up to Kiyosaki or walk up to these guys on the side of the road and become friends with them. I mean, it's more because of relationships, and everything that I've really accomplished had little to do with me and everything to do with the relationship that I was able to gain. So that's where I've really tried to improve. I grew up insanely shy, really introverted, and I've learned that in business, you can't be that way. You have to be friendly. You have to create value for people. You have to go above and beyond and really value relationships as much as possible, because that's where everything comes from.
Man, that's great advice. And I've started to break out of my shell. When we got into this, we got into real estate investing. My wife and I were both in a shell, and we were shy people, and we had to break out of that and start developing these relationships. And it was important. Like Robert and Russ, the real estate guys, they were really good about approaching us at some of the events and shaking hands and how can we help you? They're really down to earth guys, and they were willing to help. And that led to Ken McElroy and a couple others where, they really, those relationships and building those relationships were critical for us. And knowing that we have those resources and those relationships in our back pocket and we can help each other and whatnot. And I refer them on a regular basis because I just think the information, the materials they put out, all three of those guys is just exceptional.
Yeah, and that's their philosophy, and it's been cool. I mean, and that's what's all. I mean, Robert and Russ. I mean, they've been godsends to me. I mean, they're incredible people, but again, that philosophy of going above and beyond and really creating more value than they consume is what they live by. And right there, that I think is really one of the main things that separates what we try to do versus what the mainstream is, because the mainstream financial media all focuses on a specific financial product that will set you free, that'll create, as you said, in your introduction, financial independence, right? And that's the farthest from the truth, right? It's the individual, right? Us, we're our greatest assets, and our next greatest asset is the people that we know. And so the insurance product and the strategy that we use, although there's some features to it, it's really the way in which it changes your behavior, the way it makes you think, and the subsequent decisions that you make are able to really create what you're referring to as financial independence.
So really, I mean, granted, it is a product, but it's also a system of learning. And the name of your company is perfect. It's a paradigm shift, really, in life, and it's a different way of looking things. Kind of like when you read G. Edward Griffin's books. Those are definitely books that will make you think and make you start rethinking things. Kiyosaki, same thing. Peter Schiff, Trump, all of them. These are different ways of learning things that we weren't taught in school, but by learning about these different concepts and, more importantly, figuring out when is the right time to employ these different concepts and put them to work for you, and diversifying your portfolio, I think it's outstanding. Now, I heard you on a show on the Real Estate Guys a few months back, and you were talking about for example, if you've got a large amount of money sitting aside for reserves, if we're doing a syndication, let's say we're taking down a big apartment building, and we've got a big reserve account, let's walk through how you can use this type of concept. As far as you can borrow from it, it continues to grow over time. And what does that look like for the guy that owns the small to medium-sized apartment building?
Well, and it's really anybody that's storing a large sum of cash, whether it's for short-term use or long-term use, right? It's really doesn't have, I guess, in situations like an apartment building, it would totally work, but it would work, with individuals that have to keep money on the side. So for me, I'll use this, and it fits perfectly with your apartment building analogy. But for me, I mean, we have 70 people that 40 are full time, others are contracted, but we have a huge staff, huge payroll. I mean, there's a lot of money that I have to sit on, and so with our CFO and our accounting, we create different line items and obviously project and understand kind of what our future 3 months, 6 months, what our revenue is going to be and how much money we need to keep in reserve. And I keep very little in a bank, and I keep the majority in almost 20 policies. And the idea is it's there, it's earning interest, it's private, it's outside of the business. And then when I need capital, whether it's for marketing, we have some really cool business coaches that have come on this year, which is very expensive. So we use the capital inside of the policies. We borrow against them, lend it to the business, and the business uses that money. And when it makes a rate of return, it pays it back to the policies. And so for an apartment building or for another business or another investment, whatever it is, it's when there's money sitting on the sidelines preparing for a deal. Okay, it can sit inside these policies, earn a lot more than what a bank can. It's private. There's asset protection in a lot of instances. And then when you do need it, you actually can liquidate it, right? You can withdraw money if you really wanted to. But if it's going to be for an investment, the numbers make sense to be able to borrow against that account, lend it to the business, use it, and then when you do get a return, you pay that loan back.
And now, how does this type of scenario, like you just explained, how does that benefit you from a tax perspective? It's post-tax dollars, I assume?
Yeah, post-tax dollars, the money that you're earning, the dividends and interest is growing tax-free. When you take a loan, of course, that's tax-free as well. When you lend to the business, you can loan to the business, and obviously if there's an interest charge that's on these policy loans, which ranges from 4 to 5%, the interest charge can be reduced from earned income. Now, obviously, consult your tax advisor, et cetera, but typically if you're lending for business purposes and there is expense to that loan, the interest is the deduction against the income of whatever that investment is.
That's very, very interesting. That's very interesting, especially what we're doing. Well, I think about this for the apartment buildings and whatnot. Like I was saying earlier, we will have these large piles of cash sitting around doing nothing, and it kills me that it's just sitting there and it's doing nothing.
Well, there's a lot of money. I mean, we get the fortunate side of our business is we do everything remote and web conference and video conference, and we meet with thousands and thousands of people. And there's a lot of money, there's a lot of cash on the sidelines right now, and there's a concept in economics that's known as the business cycle. Now you have traditional business cycle theory, then you have Austrian business cycle theory. Austrian business cycle theory basically says that when there is a lot of cash and it's leveraged cash, that is when malinvestment happens. Now, and this is what I think is occurring right now. People have a lot of cash and they're like, I don't want cash. I don't want it in my bank. I need to get it out. I need to deploy it. And people are willing to take unnecessary risk just because they want their money out of cash. And that's dangerous. I've seen it in my own personal life, but I've seen it in a lot of clients' lives where they're like, okay, well, it's a property, and it's gonna be a 5% cap, and I just want money out of cash, so I'm gonna do it. Where it's a risky deal and it's not worth the risk. So that's where strategically it comes in handy, because you are earning a rate of return. It's a tax-free rate of return. It's not a double-digit return, like a real estate investment would be and so forth. But we always tell our real estate investors that you need to create your benchmarks and your criteria. You need your benchmarks GRM. You need your benchmark cap, cash-on-cash return. If you have these benchmarks and a deal comes to you, then that is when you'll utilize the loan to lend to the business and then acquire the property. But if the deal doesn't fit the criteria, don't do it. And that's where if you have cash, you can be impulsive. But if it's sitting in a policy in cash value, I mean, it takes a day, it takes 2 days. I mean, there's some time there to get the money where you can really think through and remove the emotion that's associated with those impulse type of investments and buys.
That is powerful advice, and we're seeing a lot of that in our market down here in the Tampa Bay sector, where people are actually getting in fistfights over properties, and it's absolutely out of control, ridiculous. And I've had buyers call me, and they're in an absolute panic, and we need to offer it on this right now, right today, and we don't care what it costs. And what do you think?
The human being, as I said a few minutes ago, the human mind is your greatest asset and your greatest liability, right? Because what does it succumb to? It succumbs to emotion. And emotion, I mean, we make some good decisions off of emotion, but more often than not, emotion removes the rational side of things, and that's where decisions are ultimately what makes or breaks us. And so, if you have a system, if you have a framework for those decisions, it makes it a lot more difficult to make those impulsive moves.
So during this process, that's a valid point. You're replacing taking the cash and placing it somewhere where it's relatively safe. It's sitting there earning, it's moving. Idle dollars, like I've talked about in previous episodes, when money's sitting still is not doing anything, it eventually disappears over time. And by putting it into something that's actually keeping your money moving while you're out doing your homework, finding the right opportunity to invest that money in, whether it be stock or oil futures or real estate or whatever you wind up investing in, this provides that extra layer of protection, that kind of like a I don't know. Let's call it like a little bit of a devil's advocate. It's like, that little angel on your shoulder saying, okay, well, you're not going to be able to just swipe your debit card this time. You have to go through this extra step. So we want you to think this through a little bit. And like I said earlier, we've been having this problem in our market where people are in the scarcity mentality. They feel if they don't buy something right now that all these terrible things are going to happen. And yeah.
And that's just, I mean, that's where education comes in. You know, that's where knowing your numbers, knowing your goals, knowing what you're trying to accomplish. You know, there are people we meet with where they don't really have to do anything, but they want to invest. Okay, they have here's my income goal, Patrick. I want to make $150,000 in retirement. Here's what I want to retire. I'm like, okay, well, you could do that right now and don't have to invest anything. Well, I want to invest. Well, why do you want to invest? Well, I want to make the thing is, in the end, it's like people are just they're conditioned that they have to invest. They have to buy real estate. They have to. You really need to, and this is, a lot of our education that we do is we really try to get down to the granular of what you're trying to accomplish. Are you trying to pay off debt? Are you trying to send your kids to school? Are you trying to retire? I mean, what are you trying to do? And because products, financial products or an investment, it's going to do something, but does it really align with what your future financial life looks like? And sometimes it does, sometimes it doesn't. But really, that should be the starting point. And then if real estate does fit in there, then you have to come up with criteria. And if that criteria is, this rate of return and this much cash flow, and then that's when you take money out and use it for that specific deal. But if it doesn't fall in those guidelines, then don't do it. But I've seen because we started Paradigm Life in 2007 and 2008 and 2009 almost took me under. I mean, I had partners in the beginning when I started it, and then had a horrible experience. And in 2009, 2010. That's when I was kind of just trying to keep my head above water, and I saw a lot of other people go through those exact same issues. Now, it wasn't necessarily with business, but it was with real estate. I saw foreclosures, and I saw short sales, and bankruptcies, and I saw everything. And it really taught me really valuable lessons because all of those hardships, even my own, were created by a choice, created by a decision. And if there was a system, and that's really what kind of keeps me on this mission and on this trajectory to help people become financially educated, because the education isn't to do a deal. The education isn't to buy an investment. It isn't. The education is to make good decisions.
Absolutely.
And that's where that's kind of my passion and what I'm trying to always do, because it helps me. I mean, I still need to make decisions as well, but really it comes down to the education of other people, because in the end that's what that's the thing that they control.
Well, what's going on in today's marketplace? We're seeing this across the country is that people they need that quick fix. They're not willing to put the time in to educate themselves. They're not willing to take the time to get financially educated to be able to make these decisions that make sense. They just want the quick fix, like you were saying. I have to invest. Well, why do you have to invest? What we teach people that are doing what we do now, we do real estate syndication, where we're bringing several investors together, and that's our primary focus is that, and we'll buy apartment buildings and whatnot. But from time to time, we have to say to some investors, it's like, we don't think you're ready. This is not going to be a good fit for you, because they're looking for that quick fix. We understand that this investment is just not going to make sense for them, and we have to say, I'm sorry, but this isn't going to work. And they look at you like you're cross-eyed. It's like, but I'm willing to give you money. That's not why we're doing this.
Yeah, we do the same. We do the same thing. When you were talking, this was about a year ago, because I'm doing a lot of more of the executive and management stuff and training these days. But about a year ago, I met with a couple that had 7 kids, and they went from not making a lot to making a lot. For a couple-year period of time, and I was going through everything, and they have 7 kids, but they didn't have health insurance, right? They didn't have a will, or they didn't have a trust, and I'm like, and they had this like $100,000 hedge fund investment or whatever. They couldn't even explain to me. So it's kind of like you look at their priorities, right? And I know everyone likes to invest; it's the sexy thing to do, but at the same time, keeping your house in order, in my opinion, is much more important than that, because investing, really comes after that. But you're absolutely right. I mean, I think in our modern society, it's such an amazing time to be alive, but at the same time, we have become accustomed to immediacy. We've become accustomed to click, 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 click. Everything happens in an instant, and I don't think that's wealth building, and I think that's a recipe for disaster if that's what most people think wealth building is. So
it certainly is, and they feel they're going to build their wealth within a matter of months, and that's so not the case. And that's one of the reasons why we put out the Cash Flow Guys podcast, is to demystify a lot of this and to get people like yourself on the phone and take some of the urgency out of this, so to speak. Granted, we talk a lot about taking action because that's critical. You have to take action. You can't sit on the couch, and the knowledge is not going to force itself into your ears and into your brain. You're going to have to go out in the field, and you're going to have to network and go to different events and get online and join these webinars and all these different plans so you can learn and have a good grasp and understanding of what you're getting yourself into. There's lots of good stuff out there, folks, lots of good stuff out there. However, you first have to stop, take the time, as we always say on the show, to educate yourself. Speaking of education, I know you started the Cash Flow Wealth Summit.
Yeah.
Let's talk about that.
Yeah, so that was I have no idea where these ideas come from, but I was with Tom and Andy and a few other people, and I was it must have been another conference. Okay, there's a marketing software we use. It's called Marketo, and they had Kiyosaki speak on it, and so I got some notification. And it was a virtual conference. I think that's where we got it from. So Marketo, does these, and there's another group that what's their name? Inside Sales that does it as well. So it was a fascinating concept. They had tens of thousands of people that attended. So I'm like, okay, why don't we do that? And here we are talking about impulsiveness.
Right.
It is kind of one of these impulsive things. But that in the end, if it's something you can control, and something you're passionate about, I think that's that it is a type of investment. Maybe you can justify the impulsiveness. But anyway, yeah, we found a platform where you're able to do video presentations, and it basically replicates what a live conference is. So you go into this web portal, and you have, there's speakers that speak during different time slots, and there's a virtual booth that the speakers can post their material on. It was really fun. It was really expensive, and it was a really hard experience for my team to do it. But we're going to do another one. The next one, we're going to be announcing that about 2 weeks. But the next one's second week of June, and we're going to have a lot of same speakers back. The entire Rich Dad team is going to be presenting, so it should be fun. But the idea behind this conference is to really focus on the principle of cash flow, and I do believe it is a principle. Now, cash flow doesn't always have to come from investments, but income, right, is really what sustains our lifestyle. Okay, if there's only so long a liquid asset will last. You have $100,000, you start taking $10,000, a year off of it, it's going to run out, right? But cash flow and income doesn't run out. And really being able to, replace active income with passive income, the idea there isn't necessarily to, just sit on the beach and drink margaritas. The objective is to really figure out how you can, turn you as your best asset into a cash flow producing machine, right? But the idea is right now people are stuck in the mire of employment, of their jobs, and they don't have a way to get out other than their retirement date. Cash flow for them is essentially a permission slip to quit and do find something that really is going to suit them that they can do whether they were paid or not. So the idea behind the whole summit is that philosophy where here are 30 speakers that are going to focus on multiple ways to create income, multiple ways to create cash flow. We have marketers that are going to be speaking. We have real estate guys that are going to be speaking. We have stock market guys. We have business guys. We have money management guys, tax guys. So really a lot of different sectors all focusing on the same topic.
Yeah, I was looking at the website there, and for that, well, we'll put it in the show notes, but for those that are listening, it's cashflowwealthsummit.com, cashflowwealthsummit.com, and talk about a star-studded event. You've got the best of the best speaking at that. It's impressive lineup, that's for sure.
Yeah, and that's really it's very easy for people for speakers to do, right? I think speakers would love to do more and go to more conferences and get on the road more, but there's only so much bandwidth people have. So I think it's perfect venue for them to give their message, and because it's really easy, they don't have to leave their house or office. They can present and communicate with people live. So it's really it's a really cool platform. So this year, very very similar crew. We have a few new speakers, but it's free. Doesn't cost anything. So it's I don't know. Maybe we'll charge next year, but we're just trying to still figure out a lot of the the ins and outs so that it doesn't cost us anything. But
right.
Still, it was fun to do. It was cool to get everybody together.
Well, I'm looking forward to that. I have already, before I got on the call with you, I already registered for that, for the notification when it happens, because I love that cast you got in there. And before we sign off, you've got your own podcast, Well Standard Radio?
Yes.
Okay. And that's, of course, available on iTunes and all the other available podcatchers out there, so to speak.
Yep.
And you've been doing that for quite a while, as we talked about earlier. So, guys, take a listen to that, and I'll put a link to that in the show notes as well. And, Patrick, I know this is a process, and it's not a turnkey, like we have product A, B, and C, and that'll fit everybody. I know it really is a case-by-case scenario, what the services the Paradigm Life offers. So what's the best way for somebody that's interested in the concepts that we talked about today to learn more? How do they reach out to you and learn more?
Yeah, so what we did, this is a number of years ago. We're actually going to be launching a new site in the next month and a half, but the one we have up right now is a few years old. But the reason why we built it the way we did is that it houses really all free education, so that somebody can go in and learn exactly what we do and learn about the insurance products, learn about how they're used, learn how a few different applications, and then we really focus on strategy. So our consultants, we call them wealth strategists. They basically get individuals on the phone. They look at their financial situation. They come up with a strategy. They figure out their goals and their needs, and really try to use our services, use our insight, use our calculators and our software to show them, okay, if you want to be there, this is what it's going to take to get there. But that's not for everybody, and sometimes people are just not ready to take that step. So that's why we have put a lot of different education online, so that when individuals are interested, we're able to provide them that resource.
That's good news.
So
that's
so
awesome.
you just go to our website, paradigmlife.net, and then there's a few ways to log in. But it's free. There's quite a bit of stuff on there. We have some real estate courses. We have just general money management courses. So yeah, it's free. So yeah, anybody can go on there and sign up.
Well, there you have it, folks. ParadigmLife.net. ParadigmLife.net. Well, Patrick, thank you so much for spending the time with us today on the show. We really appreciate you having you out. We're going to, as the more we learn and the listeners take part in some of your materials, we'd probably like to get you back on the show again to cover other specific topics. And today was more of a general overview on the services that Paradigm Life provides and what Patrick provides and the different things that he's working on. But we'd like to have you back again, so we hope you'd be willing to take us up on that.
It'd be an honor. More than willing. Just let me know.
All right. So, guys, as you well know, as we're getting ready to wrap it up here, so we're going to sign off here momentarily. But before we do, you've got the contact information for Patrick Donohoe, ParadigmLife.net. Reach out to his website. Take an opportunity to learn to earn on his website. Lots of good information out there. I'm excited about it. When I get off this call, I'll be on there. You can assure that. If you need to reach out with me again, it's cashflowguys.com/ask Tyler. Cashflowguys.com/ask Tyler. Want to reach out to us through Facebook, facebook.com, or you go to cashflowguys.com/group. Cashflowguys.com/group. As always, we are glad you met us out here today. We look forward to your continued learning process. And always remember to learn to earn.
This concludes today's episode. You don't have to wait till the next episode to learn to earn.
Head over to cashflowguys.com and contact Tyler and his team for more powerful tips and ideas so you can start generating multiple streams of income and escape the rat race.